So, Nigel, in this kind of an environment where everything is it looks so good, the index are at all-time highs. We are seeing record inflows from the domestic mutual funds. Suna is going to put out a piece on how the demat accounts are at record levels as well. So I thought, let's look at some realistic data and show as to why one needs to be a bit cautious as well. I'll just read a couple of important data to just justify as to why a word of caution is required at this point in time. The first, I think you were not there last week, but we put out a piece that January typically is a month which is lightly on the lower side. Out of 15 years, 9 years or 10 years, January
out of 17, 11.
So that's one thing that January historically has been a weak month. And this you need to put into context that November and December were very, very strong for Indian equities. We've actually outperformed virtually all the world indices in last 2 months. So, the January is a weak month, but on the fact that we've rallied also very hard. So that is something we need to take into account. Yesterday, 11 stocks were in F&O ban. And last I was checking that data in September of this year, when 12 stocks were in F&O ban. After that, in 1 month, the Nifty corrected 7%. Okay, so that also gives an indication that maybe it's getting a little bit overbought and euphoric from a F&O positioning as well. In terms of valuation, in terms of sentiment, we are at the peak, right? The markets are at peak in terms of sentiment as well as valuation. I'll just put a word on the valuation. At 20 times or little over 20 times on Nifty for forward PE, it's after that it's only been 8% that we've rallied higher in that particular month or in a very short period of time. So typically after that level, you see a bit of correction in the market. So that's again another sign. Even if you look at Nifty versus, in terms of equity versus bond market, the equity premium is at a much higher level compared to the bond yields. So either bond yield has to rally pretty hard, or we have to correct. Equity has to correct. So even that is not giving a very, very positive sign. The CLSA Nifty Bull Bear Index is at a 95% on the bull side. Okay, that also shows that the retail sentiment is so much bullish. Everybody only feels that market is only going to go up. So that again, from a position point of view, is not something good for the Indian markets. Even in terms of India's own market valuation versus history, we are at the record highs, and we are actually among the most performing markets, best performing markets among the 19 countries globally. Even that gives you a sign that maybe we are a bit overstretched in terms of valuations. Historically, in the year of elections, normally India does well. But again, the feedback is that to some extent, market has already priced in the third term for Mr. Modi.
Yes.
And hence, even from that perspective, you may not see a big upside, even if that event has to play out from an equity point of view. So that again is a bit of a thing to watch out for. And lastly, I was reading a note from GM's technical analyst. He feels that this is a suckers rally. And this is very much visible this week, right? Every day we saw one sector doing good and stock rallying 8-10% without any reasons and without justification. So that's a kind of a suckers rally which might suck a lot of people on the wrong side, and then it may collapse. So these are the 7, 8, 10 odd points which do indicate that while everything looks good and hunky-dory, one needs to look at data and one needs to bit caution from a near-term trading perspective.
Okay, well, that's very important actually. That caution is much needed, especially at a time when things are looking euphoric. But thank you for watching CNBC TV 18. For all the latest news and updates, do follow us on our social media platforms.